The semiconductor race is now certainly starting to heat up, and some stocks are starting to go absolutely parabolic. And in this video, I'm going to be showing you some of the semiconductor and AI enabling stocks in which will absolutely shoot up if everything goes to plan this year. We're going to be going over key technical levels and why exactly we are looking at these stocks. And to break it to you now, realistically, in a gold rush, who do you think makes the most money? Is it the people digging the gold? It's actually the pickaxe suppliers. For another example is when you go to the store and buy a cookie, who makes the most money on that cookie? Do you think it's the actual people selling the cookie? Well, it's probably an accumulation of all of the ingredients. So whoever sold the ingredients made the majority of the profit. And in this video, that is exactly what we're going to be trying to be going and finding out. So let's get straight into this analysis. So currently markets as a broad consensus are very bullish, of course, in my opinion, very much overvalued, but there are certainly some golden gems within this, and they are exactly what I will be going over in this video. So the current chart you're looking at here is a semiconductor ETF. As you can see on these EMAs here, we are now in a golden crossover, indicating the momentum is on the side of this current price. And if you're thinking, well, what did it do last time we were in a golden crossover? Well, last time we actually saw this jump up from $19 on this ETF all the way up to 29. So we could see a similar result. Of course, we have already seen a lot of the momentum within this stock already from the recent, or if you want to call it a crash, it was more of a correction, but we are now seeing similar territories to what we saw in the past, just with, of course, this previous hike. So on this chart, if you can really see this, as I'm not sure how well OBS really renders these sort of charts, but you can see here the last trading day actually closed as an upside down hammer, which is really not ideal. That essentially indicates to me and to anyone else who knows candles that there was a lot of selling later on in the day as people were starting to take their profits out of this stock. This doesn't really look like a good chart to really understand what has happened here, but in fact I think TradingView has actually broken. It won't let me go to a day anything lower than a day chart here, but you can basically take away from that people are starting to take profits off the table late Friday trading, which obviously isn't ideal, but if you are a trader, that's just what you do. That's the nature of the game. So in my mind, I'm not too worried. We might see it open up slightly bearish on Monday, but if we do actually zoom out and look at a broad market consensus, we will actually see that we have actually broken out here above key levels of resistance, and we are now at an all-time high. So next week we could see a lot of FOMO placed into the market, or we could see a lot of selling as people are starting to take profit from the people who were basically bought in here and were like, well, we might as well sell out now. We're back to zero. I will take that. And realistically, it's probably not the right way to invest at all, because this is, especially the broad market as a whole, it's always going to outperform the majority of investments. So it'll be really interesting to see how this goes next week. But back to the topic at hand of this video, we are looking at semiconductor stocks after all. So what semiconductor stocks am I actually looking at? So the first stock and the most obvious pick is, of course, Nvidia. If you were actually not expecting me to say this, then you are a bit silly. I'm very sorry to break it to you, but Nvidia is certainly one of the best stocks to be holding. It is now at an all-time high again. It's in a golden crossover, and it is closing above all of its EMAs very consistently. It looks as if this momentum for Nvidia has only just begun, and we can realistically expect this to be prolonged, especially if the macros line up and rate cuts actually occur. I think we will see a lot of investment into Nvidia as this year continues, but I'm still very worried about the market as a whole, and Nvidia basically is the market as a whole. When you look at the ETFs, for example, a lot of money is poured in and out of Nvidia on a daily basis, and when you do look at how overvalued markets are currently, they're at over 37 shillers PEs. It certainly looks like markets are hugely overvalued, especially when CEO confidence is lacking at the moment. Therefore, I am a bit cautious with this recent hike. That's not really the point of the video, but I do think that's really important to share with you guys, because I'm a bit concerned about the sustainability of where the markets are heading right now. I'm in it for the money, of course, like we all should be. You've got to play the game, but how sustainable the game is only something in which time will tell. On a Bollinger Band here, we can see that Nvidia is starting to look slightly overbought, so maybe next week we'll see this start to calm down and move sideways slightly. So hopefully this starts to look a bit more sustainable, and if we do actually zoom out to a price target, well, we can't actually, because there isn't any price targets on TradingView for Nvidia, which is incredibly weird. Okay, so looking on MSN instead here, we can see that based off of 66 analysts here, we can see that Nvidia is priced in at a strong buy. I mean, that is absolutely incredible for the largest company in the US markets. Of course, their PE, last time I checked anyway, was below 50. I'm not entirely sure what it is now. I will double check that, but it just looks to be absolutely incredible. It looks to be set up in an amazing place right now. And when you look at the broad market as a whole, especially the actual sector, it's fair to say Nvidia could certainly be a great buy, but I do actually think these stocks coming up later on in this video could be even better buys, and we'll get onto that now. Okay, so now looking at Advanced Money Destroyer, as I have previously called it in the past, and I think it was perfectly fair for me to say that. So I was saying this around this point here when it was falling. It was a falling knife, and why on earth would you catch the knife that is falling? Because it's just never a good idea. And now it's finally broken out. It's like, well, you've got to change your mind on stocks, don't you? Otherwise, you don't make money. If you're someone who's consistently bearish on something and then it breaks out and then all of a sudden you're still bearish, it's like, well, you're not doing it right. You need to be adaptive in this world, and you need to understand that when an opportunity arises, you need to capitalize on it no matter what your stance in the company is. And still, even with this point, I actually do believe AMD is a great company. I think the markets have now finally actually realized that they're not meant to replace Nvidia. They're meant to be the number two, and they are pretty good at being the number two. So I think it's fair to say that they will take a lot of market away from Nvidia in the coming quarters and years, especially as they come out with their improved GPUs and CPUs. It just looks to be as if they're going to do really, really well, especially in the world of business. So Advanced Money Destroyer has actually broken out of its resistance bands here, basically its regression cycle. It is now consistently breaking through all of its resistance levels, and it is coming up to the next level at 148. Now, I do think that this stock will push past this quite significantly. We have seen the stock actually have a bearish close again yesterday, but I still think that this stock will do really well in the coming months, especially because, again, the broad market for semiconductors, the sector, is doing incredibly well. So we actually can't see any price targets again. I think it's just a trading view issue because it's the weekend as of recording this, but we are now only just about in a golden crossover on the EMAs. And when we actually look at the Bollinger Bands, I imagine it's overbought. So yeah, it is overbought. So if you were looking for a more sustainable buying price, then maybe it's something to wait on, especially as we approach this level of resistance. But I still think that this stock will do really, really well long term. I mean, the analysts from last time I checked were saying that there's a potential near $200 upside. Well, that's in the price, of course, with the current price coming in at 143. So there is obviously a lot of growth placed into this stock. And when you do actually look at the general analysts, there's still around, I believe it was 17 analysts putting this stock at a hold still. And as soon as those analysts, you only need like 10 of those or even 7 of those analysts to basically go from a hold to a buy, and then all of a sudden this stock is just going to absolutely rally. I don't think we're going to see any downgrades in this stock in the near future. We're only going to see upgrades, which of course is always only just going to help the stock price. So I am actually in AMD. Well, I'm in pretty much all of the stocks mentioned in this video, but I got in around the 119 level here once it realistically broke a level of resistance. I mean, you can't really see it here, but it did hit this level and then go straight back down, and then it jumped straight back up, which is where I got into because that showed me that the momentum was really on the side of the stock. But if you want my actual formula and my opinion on this stock, I have an intrinsic value for this year to only actually be set at $141. Now, that's not to say that's where I think this stock should go, because when you do actually look at the forward PE, this stock is growing massively and will continue to push past all of the boundaries. But for my formula, that is the results in which I yield. As I just mentioned, looking here on the forward PE, this is currently at 38 with the trailing PE coming at 104. So you can realistically see that this stock is always trading at high PE and it's looking to be as if it's going to start coming down. I don't think that this stock is going to be consistently at a 100 PE. That is not sustainable at all, but I do realistically think that it should be going up from here. And of course, it already is. So exactly that is what we are looking for. So next up, we're looking at Micron. So who are Micron? For those who aren't massively familiar, well, they are one of the world's leading memory chip makers, specializing in DRAM and NAND flash, used in everything from smartphones to data centers and AI servers. So again, these are one of the stocks in which are really going to be fundamental for enabling AI going forward. So we have just seen an incredible beat on Micron's earnings, and despite this, we actually saw the stock slightly fall. I think this was mostly due to people taking profit off of the table, but in my opinion, this is just still a stock which should go absolutely ballistic over the coming quarters. So on a Bollinger Band here, you can see that this stock is starting to look more sustainable than it previously was. The hype has certainly slowed down, but I still believe this should be going up from here. For the price targets, if they do show, which they actually are, which is really nice, show that this stock still has an average of a 20% upside with a maximum of a 60. And if we do actually have a look here at the forward PE for this stock, again, it's similar to AMD, where this is trailing at a 22 PE and the forward PE is currently at 10 and the actual PE is also at 22. So this stock consistently likes to be sitting around the 22 PE range. So it's fair to say that we could expect this to certainly increase, especially when you look at the earnings here. If you just have a look down at the tab here, we can see how consistently this company is smashing out its earnings. So for me, especially when you look on the EMAs here, we are in a golden crossover again, and it's consistently, of course, closing above all of the EMAs, and more specifically the 150, which is what I look for. So again, this stock looks to be enabled for immense momentum. Of course, this is not financial advice. This could, of course, come falling straight back down from here, but I think that this is set up in a very sustainable way and looks to be as if it will continue to rally from here. But of course, again, not financial advice. So next up we have Broadcom, and who are Broadcom in a very basic term again? Well, Broadcom is a semiconductor and infrastructure giant quietly powering the backbone of modern tech, from data centers to 5G networks, Wi-Fi chips, and now even AI infrastructure. This stock certainly looks to be set up in a very sustainable way as well. Obviously, there is a generous, I would say, price target from the analysts here, of the average coming in at a 7% gain and a 48% maximum gain, but there is a 22% the downside to the stock according to the analysts. So we've seen this stock basically rally from the start of 2022, or the end of 2022, sorry, and it just basically hasn't really ended from there. We are obviously now back into a long or a golden crossover on the EMAs, and we are closing consistently above all of them. If we do look here at Broadcom, so they are currently at a PE of 97, and furthermore, the forward PE is at 40, with the trailing coming in at 98. So there is a potential upside just from their earnings, of course, if this stock consistently likes to trade at the 90 PE level. But for me, I don't think that's long-term too sustainable. But of course, with these current stocks, and when you do look at the broader sector, it's fair to say that this stock will most likely continue to rally. Furthermore, this stock is now at an all-time high again. So when a stock reaches an all-time high like this, it breaks its previous resistance of a 52-week or all-time high. It's more than likely just to continue to rally from there, especially when we've seen this bull pinch here. If this can load for you guys, we've seen this stock essentially create a tightening point here, and then it broke straight out. So it looks to be set up in a really nice position right now, and I think if it correlates with the market and the actual sentiment, then it will do really well. So finally, we're looking at GFS. So who are they? Well, they are one of the top contract semiconductor manufacturers in the world, and one of the few based in the USA. They have a global demand for secure domestic chip production, and as this heats up, it's just going to increase. GFS is uniquely positioned to benefit from US subsidies, the CHIPS Act funding, and a growing list of high-profile clients like AMD and Qualcomm. But when we actually look at the chart for this stock, it is completely different to everything in which we have seen already in this video. This is certainly a falling knife, and I would not recommend buying into this. Even if right now it looks cheap, you need to ask yourself, why does it look cheap? Why would you realistically buy a stock because it's cheap? I'm not saying it doesn't work, it certainly does work. But right now, when you're seeing this fall, why on earth would you wait for it to continue to fall before you actually decide to buy in. For me, I would like to see a golden crossover within these EMAs, and I would like it to basically close above the 150-day or the 200-day EMA to essentially secure the fact that this stock is now consistently positive and looking to be as if it's going to break out. You have actually seen here an example of what not to do. So up here, we've seen this stock consistently close actually above the 200 and 150 EMA, but the golden crossover was realistically not there at all. It looks like it's crossed over for potentially a day, and then it's fallen straight back down. But even as this was actually crossing over, we'd seen the stock price falling down. So you would want to wait, basically match this all up and wait for it to consistently close properly. But for me right now, that is not a situation in which this stock is in. If we do look down the bottom here, it is consistently beating its earnings, so that is incredibly positive. This stock actually isn't in profit at the moment, but they do have a forward PE of 25. So when this stock does break profit, I think this could rally with a massive potential. So it's certainly one to keep an eye on, but for me right now, it's not something in which I will be looking to buy into until it breaks out. We're going to want to see this break a regression trend or the regression cycle consistently. And if we do actually look at I forget what they're called now. What are these called? I've completely forgotten. The Bollinger Bands. How did I forget that? Then we will see that we are in a relatively sustainable territory, but that is sustainable falling down. That's not really what we want to see. So I hope you have enjoyed this video. Of course, none of this has been financial advice, and if you are a keen viewer of this channel, you will notice I've got a new background. Now, the next few videos coming out after this are pre-recorded all today and yesterday, and they will be coming out over the next few days or weeks, well, a week essentially, because I am away on a holiday as of the upload of this video. So bear with me, I will be back as soon as. I hope you do enjoy the content whilst I'm away though, and please do let me know if you like the background. I spent some time on it and I think it looks pretty cool. And if you didn't notice, up here somewhere it actually says subscribe. It was a little Easter egg, but it's probably not even that good. But realistically, I hope you have enjoyed this video. Again, none of this is financial advice. You should always do your own due diligence before buying into a stock, as when you do, your capital will be at risk. With that being said, I will see you for the next video.